What is going on, guys? Welcome to the Traveling Crypto. Before we get into the main topic that I wanted to discuss today, let us waste no time and get into a market update. The market cap currently sits at 430 billion. Bitcoin's dominance remains around the same at 36%. We are kind of trading in this consolidation pattern in the sideways trading. Like you can tell by some of these, most of the percentage gain, most of the percentage loss on the top 20, top 30 cryptos within the last 24 hours. It's minuscule for crypto or for crypto losses in general. There was obviously one surprise, which if you were tuned into the markets in the last day, you were aware of, which was Bytecoin. You see that over the last 24 hours, it gained 98%. And this was obviously due to its Binance listing. I saw this article on the Merkle, which talks about Bytecoin and how the price pump is actually unsustainable. Weirdly enough, it doesn't say anything about its Binance listing and says that, it has pretty low volume at 54 million. Although if you go back and look at it now, it's almost $500 million. So it's 10 times what was reported here. And they were saying that the price was unsustainable because the volume was so low, and that, it was, where is that quote? And that it is evident one or two whales are manipulating the market in the hopes of dumping on new investors. Nowhere in here does it mention Binance, even though this article is dated today, which is hilarious. Crypto news sites, step your game up. I've been noticing a lot of errors and lazy journalism on your parts. Back to the markets. Looking at Bitcoin's chart, you'll see that we had this ascending wedge pattern, and Bitcoin broke the support line of that ascending wedge, and we're currently trading right. You can't see it because there's this horizontal marker here, but this green line right here is actually the 100-day moving average, and we're sitting right on top of it currently at around $9,100. Looking at the momentum oscillators, you see the RSI losing momentum. You see the MACD, the 12 just crossed beneath the 26 and looks like it's heading downwards. The stochastic, which is a leading indicator, looks like momentum is bottoming out. Now, the only good thing I would say about this chart today is that if you look at the BTC shorts, the short contracts, and that is the larger topic that we will discuss a bit later. But if you look at the short contracts here, it looks like not only are they stagnating, but they're actually falling a bit. So the short sellers are still afraid to dip their toes in the water, which is good, meaning that they're skeptical about Bitcoin's recent slight dip in value, and they don't feel confident about it dipping further. These are the markets that obviously could change, but this is what the state of affairs is currently. Like I said, we're at around 9,100. The next level down is the whole number of 9,000. There is a whole number bias. This has been proved over and over again in different markets. And the next level below that is around 8,800, which is a strong support based on the last few weeks of trading. So if we break 8,800, then I will start looking to re-enter at a certain price level, maybe between the 0.382 fib level of 8,400 and the 0.5 fib level. I'll start looking to make opening positions to scale in order to swing trade Bitcoin. All right, on to the topic that I wanted to discuss today. So it says, Fed report, Bitcoin futures creation and fall of cryptocurrency was no coincidence. Now, there are certain things that we speculate that are going on behind the scenes, right, as crypto traders, especially being that this is a new market. Not only does this market aim to challenge the equity markets in the long run, but this aims to cryptocurrency. One of its goals is to change the fundamental way in which we transact with money. One of the major goals is to change the definition of money and take control away from the traditional powers that be and put more of that control into the hands of people that are actually spending that money and accumulating that wealth. It's no secret that cryptocurrency and Bitcoin are threats to the long-standing monetary systems that we have in place today. So this article that came out yesterday published an excerpt from a letter from the Federal Reserve Bank of San Francisco. And what this letter does essentially is officially credit Wall Street with the decline of the cryptocurrency market and the decline of Bitcoin's price. If you remember back in December, we were at $800 billion in market cap. Bitcoin's price, now the notorious 20K price level, that was just back in December. It wasn't that long ago. So its fall from grace, its fall from those all-time highs according to the Federal Reserve, was directly related to the futures market that the CME and CBOE created in order to combat Bitcoin's run-up. Here's a quote from that published letter. The subsequent bust was driven by the creation of instruments that allowed pessimistic investors to bet against the housing market, the Federal Reserve wrote. Similarly, the advent of blockchain introduced a new financial instrument, Bitcoin, which optimistic investors bid up until the launch of Bitcoin futures allowed pessimists to enter the market, which contributed to the reversal of the Bitcoin price dynamics. The authors of the report said the introduction of futures ended the one-sided speculative demand. So there you go. The Federal Reserve is officially giving credit to the futures market for cutting the market cap of Bitcoin and of the cryptocurrency market in general essentially in half. Now, I've said this before, but if you take a look at Bitcoin's chart, yeah, obviously we had this anomalous period here where we hit the all-time high of 20K and quickly ran down from there. But the run up to 20K was parabolic as well. It wasn't like it was gradual. So the channel that we are currently trading within after that 20K high, this is the longest period of trading that Bitcoin has had at these high levels. Before this rally here, we had a period of trading, of sideways trading, where Bitcoin was trading between $1,000 and $2,000. And then we had this run up to the 20K, which again wasn't gradual, it was parabolic. So we didn't actually spend quite a bit of time in this channel, if you want to say between 7,000 and 11,600 or 11,500. So this is actually the longest time frame that Bitcoin has been this valuable. Now, the futures markets could have sparked, I guess, a decline in Bitcoin's price or in Bitcoin's price dynamic, or it could have attributed to its eventual fall. But anytime you see something parabolically rise to 20K, I mean, what was the ceiling going to be, right? If earlier in the year you were priced at 1,000 and you quickly went up 20 times in price, of course there's going to be a pullback. If you ask me, the fact that we're trading, at the 9,000, 10,000 levels is great, considering that we were at 1,000 and below that in 2017. I think a lot of things contributed to the price decline of Bitcoin. The fact that a lot of the volume that came in during the holidays of 2017 wasn't from people who normally traded. We had a lot of people who were FOMOing in based on what they heard on the news or what some celebrity said about Bitcoin, or what how much money some of their friends made who were smart to invest in cryptocurrency early on. There was a lot of FOMO. There was a lot of hype. So of course, those people were going to exit the market as soon as the ship has sailed. But yeah, I have no doubt that what the Federal Reserve is saying, that the futures markets did do something to combat the rise of Bitcoin. Let's not forget how manipulable cryptocurrency and Bitcoin is in general. I mean, if you have large amounts of money, you pool investors together, and we're talking about hundreds of millions of dollars, you can affect price. And Bitcoin itself has a very bad Gini coefficient, which really is just a fancy word for saying that a few people own a majority of the asset itself. All right, guys, that is it for the video. Go ahead and subscribe to the channel. Hit that notification bell. I do have a weekly Crypto Picks report coming out later this week. Here's an old one if you want to see what it looks like. But basically, we run down what are the important topics in crypto, go over some analysis of the market, and then give our picks as to which cryptocurrencies might see a rise in value in the short term or long term, depending on what the play is. Go ahead and leave a comment, hit that thumbs up. We'll be doing a crypto giveaway at 20,000 subscribers. I still have a free ticket to give away to the blockchain summit in Silicon Valley, which is coming up in June. I still haven't decided yet how I want to do that, but stay tuned to the channel if you plan on going to that event. Stay safe out there. Peace.